The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. I don't know if there'll be any excitement tonight. There's no news to go by today, is there? Shut the front door, Billy Ray. Boy, they're coming after us pretty good today with all the information. But we're just going to look at a few charts. I have posted a chart in here of the German DAX, 4-hour chart, and there's a story that goes with this. As you know, Trader Tom Hugard from Trader Tom is a very good dear friend of mine. And one of his followers, actually, if you'll see that big drop in the DAX, he started with $175, folks. Now, we can't do that here because they don't have margin requirements over in Australia, where this is coming out of Australia, the firm. And anyway, he ran that $175. Do you want to guess what he made in those in that 48-hour period, how much he made on $175? He sold it at the high, bought it at the bottom, and pressed it all the way down. Anybody want to take a guess? You take $175 to what? The first is 350K is coming out for Ruby. Ruby a tiny bit too high. The answer was $52,000. Very good, Maria. Well, you must have been right in that one. Yeah, I made around 52 grand. Now, I've never seen anything like that in my years, but let's look at it. Hey, we got some great information today, folks. I'm not going to do the UK because you just saw the DAX up there, what it's been doing. But let's take a quick look let's go back into history a little bit, okay? This is what's fun about when you're doing a technician. You get to kind of do this. So what we're going to do now is we're going to go back and look at 2016, okay? And I happen to be involved with this during this time period. You'll notice here, the market closed up here. It was around 18,000 in the Dow. And then as you can see, as it started, this is a 5-minute chart, and as you can see, the market started breaking really badly when they thought that Trump had lost Florida. And remember, the early results coming out are going to be different than usually what happens. But anyway, you'll see that when they thought that he lost Florida, and then you'll notice here, we went limit down here for about a minute and a half, maybe 2 minutes. It wasn't very much. And at that point, you can see a small 3 drive to a bottom pattern there, and then the market, started to go up. Now, the reason why I'm saying it, these patterns don't change, folks. No matter what the news is, the patterns are going to be, pretty much what's expected. Now, look what happened after. Here's the key part here. Let's get this up here. Shut the front door, Larry. Let's get this up here a minute. Okay, here's what happened in the middle of the night. Then you'll see after that bottom came in, how the market started to move. Now, these come from Tom. So these are some things that you want to be watching. Watch for big spikes, and then watch for that, especially the time between 8 and 10 o'clock at night. You can see there was a nice correction there. We were still down 500-600 points at that point, and then that wasn't even a 382 retracement. And then you had another big spike, and then when the markets opened in the morning, you can see they opened they were unchanged, and then they opened sharply higher, and they went from 18,000 to 29,000. So that's going to be something that you want to pay close attention to. Now, let's go to take a look at 2012. And if you take a look at this, we'll get this. The reason why I'm showing you this, folks, is because history repeats. That's my only reason. You can see here the market opened. This was during election day and stuff. The market rallied 1 3/4 points in 2012. Okay, that was 2012, up 1.3%. Now, look what happened the next day after the market started to trade. Let's get this up here and take a look at it. And there you'll be able to see it. You'll see the market had a big rally of 1.24, and then the big correction happened, and it gave up about 3 to 5% in the next business day, and then it continued to move on. This leads us to the same story that I brought to you last week, and I want to just show you what happens during these things, because elections there are a lot of news going on, but it's the overall undermining cycle that tells you where you are. You can see what happened during the Clinton years. You can see what happened during Obama, and you can see where we are with that dark blue line is where we are with Trump right now. There's George Bush and Reagan and all the others. So even though it's in the news and everybody thinks they know something, hey, maybe they do, but I certainly don't. I'm just looking at the charts. And one of the charts that Rich Anderson sent to us is a very, very interesting here. Hopefully we're going to have Bill Meridian on today because he's under, the family there is safe, thank God, over there in Austria, but they've had terrible, terrorist attack, and makes it really difficult to do that. But look at this chart here that someone's showing us. It shows the 2012 elections, 2016's elections, and now this is the Russell, and the 2020 elections. Now, there's a potential there that that we have a 3-drive pattern, a 1-3-5 pattern forming on the negative side. So these patterns are totally different, but they do repeat over and over. I believe that we made a major top in the market on September the 3rd, which was the same as what we did back in 1929, but I don't know where it's going to go from here, folks. My job here is to try to look at, prices over a day or two or half an hour, whatever it happens to be. We want to remember that. Now, we've got one segment of the market that I think is really, really ripe, and that is the TLT. Now, let's take a look here at the TLT here. We're going to look at a really long term here on the weekly chart. This goes back, it goes all the way back into 2 years ago. And you'll notice the pattern in November of 2019. You see, here we're at the same time now, too. You see the bottom at November right there. At the very bottom on that weekly chart is where we look. Look at the pattern that's there. You see the Gartley pattern, the 3-drive pattern that's there? Well, now let's take a look at TLT on the daily basis. You're going to see that very same pattern. So to me, I think the market that's going to react the most of any of these things is going to be the interest rate market, because, folks, if we're going to start expanding fiscal stimulus and stuff, building bridges, railroads, and all the other stuff, the money's got to come from somewhere. They're going to print it, and that means those bonds aren't going to be worth as much as they are today. So be very, very careful with the TLT in here, because there's a possibility if they start to collapse, they've had a long run, and they could really make it work. But we're at major support here, too. So we're just at an area where you got to be very close. So my best guess is a market that's going to react the most of all these things are going to be the currency markets and the bond markets. I don't think stocks will be volatile, but I don't think they're going to react as much as the other. The gold market, it could go either way. I still am looking for a drop in gold down to the 1810 level, but I don't believe there's going to be that big of a surprise no matter who wins. I don't think it's going to be nearly as bad. The problem is they're telling everybody to be, when everybody's looking at the same thing, look at the other way. When the only way is up, the only way is down. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart of the bonds on a shorter time frame to show you the 382 retracement that occurred over that one-day period. And that is a very bearish formation. We've actually taken out those lows right now. That is one of the reasons why I think we're going to see extreme volatility in the notes and bonds here in the next 24 to 36 hours. Or 36 days, maybe, on who gets elected, but who knows. Anyway, that's what I'm watching. If you look at that pattern that we just looked at, now if you look at the same thing in one of our favorite things to trade, which is the euro, which we were fortunate enough to get short up there in October. You can see the beautiful sell signal right there at the 78% level, at very, very small risk, and it just went all the way down to 116.30, which was a pretty substantial move. So what you try to do is to find patterns that line up. And remember, folks, when you're dealing with these patterns, God, when they work so beautifully. But when they fail, you've got to stand aside. I mean, because it's all probability. That you're going to have a probability on your side on these patterns, at least at the very worst 60% in your favor. Now, that's a tremendous advantage. Can you imagine going into a casino and having an advantage of 60% on your side? That, every game there in the all of gambling is negative. I think Baccarat's the smallest pull, which is 1.5%. Roulette is about 8 or 12. And I think blackjack is about 8 or 9, something like that. Slot machines are about 8%. And then you get into Keno, where they get a 16%. Horse racing, 16%. Craps is not bad. It's around 5 or 6%. But then again, you have to have money management to be able to be in these things so when they do move. Now, my recommendation here for trading tonight, I'll be up probably all night. I was last year at the same time. As a matter of fact, we had a neighbor here last year that came over and was watching it with us. And when we went limit down in the Dow Jones, he bought at limit down. It just bounced off a limit, so he got substantially off of that. And then it started to rally. And he stayed in it for 2 weeks. I don't think the den is going to be open all night, is it? If it is, I'll be there. Sure, I'll be watching things. I'll be posting some stuff. If you guys are going to be there, I'll be there. All right, good. I'll be there tonight. Let's see what's happening. By the way, if you come into the den, Sarah's prepared some really nice hors d'oeuvres. We got some nice dim sum and bagels and stuff, some great Chinese tea. So we'll be serving that tonight in the den. The problem will be with delivery into the den. I don't know if we can get it to you in time. Okay, let's move on to something else. Here is a prediction from the Elliott Wave people. Let's get this up. And remember, folks, these are predictions. I'm telling you. Okay, that's it. A birthday cake. Good deal. Okay, here, that means if the market's up, there's a strong probability that Trump will win. Market's down, probability that Mr. Biden will win. But it doesn't probably in the long term, it doesn't probably mean very much on a longer term basis. That's basically, I hope that Bill Meridian comes on because I looked at his PowerPoint presentation. He's got some really incredible stuff. But folks, tomorrow, please, if you get a chance, you want to see a fun show, this is going to be good. We're going to have Alan Quartermain on the line, Indiana Jones himself, and he's going to be talking to us about buried treasure from Blackbeard and Captain Kidd. And he's also going to be talking about the yacht that he bought that ran from the Federales down in Puerto Vallarta, racing across the South Pacific to get back into international waters. I mean, it's just, it's really incredible. So anyway, I think you'll enjoy the show tomorrow. He'll be talking about, some of the things that he's done with investments and things like that. But here's a guy that has never worked for anybody else. No inheritance, nothing. Never been married, travels all the time. Jackson Hole, Europe, where he's living at the time. So it's going to be interesting to, and he's as humble pie. So that'll be fun. Anyway, let's move on. Any other questions we had? We covered the TLT. I think the way to cover the TLT is if we hold these lows or within a few ticks of where we are right now, and then the election results come out and it starts to look okay, then it's at a pretty good bottom. But there's also the possibility that the TLT could have a pretty good meltdown. And a meltdown in the TLT equivalent would be about a 3 to 4 point drop in the Treasury bonds. In other words, from 170 and change where we are now down to about 167 possibly in the Treasury bonds. That's the one I think that will react the most on a percentage basis. Now, remember now, 400, 500, 600 points in the Dow is nothing anymore. 80 handles in the S&P is nothing anymore. I mean, we're seeing this happen all the time. So you've got to be prepared for that. I mean, I don't know. Raise your hand if you can take a $4,000 hit, day trading the S&P. Good luck to you. But that's not what you want to do. You want to get in there where you don't have to risk more than 8 or 10 points and then try to make 30 or 40. Copper, 342. The HG, is that, Bo, what the heck is HG is copper, isn't it? 3.4. No, that's gas. That's the December gas. Yeah, the timber. Yeah, I don't know about that. It doesn't look very good. Let me get the. Hold on, just a second here. I think we might have made a pretty significant top here in this. Just a second here. I just looked at it. As a matter of fact, on the daily, you've got to be really careful here. We're trading at 311. Let's get the daily up, and you'll be able to see it here. Yeah, here's. I'm not so sure of that here, Mr. Bo. So bear with me here. I'll put this up. Because this was a good short yesterday. The reason why you had that massive triple top up there, and you took out the highs of the previous day by about a half a point, which is, that's nothing. That's, it's $50. And then look what's happened. We dropped from 339 down to 311. We dropped 18 points. Now we're at major support now, Bo. You'll see you're flat on there right now. It just hit it because my alarm just went off. Great timing, I guess, or whatever. All right, let's move up here and you'll be able to see. Now we've come down here. The problem you got is that big wide ranging bar yesterday and today, but it's right at the 61% retracement now at 310. And we're trading at the low has been 309.80. We're trading at 311.50. There's your risk right there. If you go below the 309 level, you're probably wrong. So there's an example of where the pattern, and all it is it's a repeating pattern of 618. And if it doesn't hold, then you're going to be looking at something that's going to be pretty nasty. And guess what, boys and girls? We are going to have Bill Meridian at the break, and you won't want to miss this. He's got some great slides, and we want to thank him for coming on today because thankfully his family was safe from all the stuff that's happened in Austria, which is very, very unusual over there, folks. They don't have that stuff very often. So we're going to take a break here very, very shortly. If you have any questions for Bill, it's 877-927-6648. And we will have him on at the break. And it'll be something that we all enjoy because his work is, all these guests are great. Bill is coming very prepared like he always does. And we'll be taking a look at this.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We have Bill Meridian, Cycles Research, on the line today. Bill, we're glad to have you, and we're very happy to know that you're safe. So you've got the mic, my friend. Go right ahead.
Okay, I just wanted to, I'm still in New Jersey, haven't made it back to Vienna yet, and it does not look like I'm going soon. So,
wow.
And by the way, the Foundation for the Study of Cycles magazine is done. and it's going to be sent out in a few days. If anybody would like a free copy, we send it by PDF. Just send a note to Bill at cyclesresearch.com. That's Bill at cyclesresearch.com, and put FSC, that's Foundation for the Study of Cycles, in the headers. So I'll know that you want a copy, and I'll send it to you. The first one is free. So let's go to the summary, Larry. That's page 3.
We're there.
Yeah, the right now we're in the end of the month periods, November 30 through October 30 through November 6th for this month. Let me explain. In his brilliant book in the 60s and again in the early 80s, Arthur Merrill wrote Behavior of Prices on Wall Street, a book which I find hard to believe is out of print. And he was the first guy to find out stocks usually move lower on Monday, higher on Friday. He studied all the seasonality and calendar effects. And he found at the end of the month, from about the 27th to the 3rd of the new month, there was a tendency, about 61% tendency for the market to go higher. And just before he passed away, he died in his 90s in 2007. I optimized that by tweaking software to do each month, January to February, February to March. And I said to Art when I started, I said, I theorize that October going into November is the strongest one because we're one of most stock market lows. The average low in any year is October 27. That turned out to be true. And we found out, or I found out, the end of the month period of strength begins on December 15th and runs to January 7th. That's 3 weeks. Some of them are as short as 3 days. One is as long as 3 weeks. So right now you're in the most seasonally strong part of the year. It ends on Friday the 6th, and I have a projected turning point. And as we'll see, I think stocks are going to move lower after Friday. Bonds to move lower, gold to move higher, oil still moving lower. But energy stocks are nearing, I think, what might be an historic low. So first, I want to show you a bull market that we haven't seen before. There you go. That's retail sales of beer, wine, and liquor. And look at the 2020 bull market.
Wow, that's amazing. So as long as you keep drinking, and you're in good shape then.
I guess so. And of course, we have more signs of excess. I guess if you get too loaded, then here's auction news. I'm using, for those who haven't heard this before, I'm looking at the auctions as a measure as to how much excess liquidity is being pushed into the system. People have, remember the $200,000 banana taped to the wall.
Wow.
This book went for 10 million British pounds, the highest ever paid for a work of literature, Shakespeare's first folio. There were 250 copies printed in 1623. Wow. So these are all new. And show the Monet shopping trolley. This is going for 3 to 5 million British pounds estimated. So that market is still alive and healthy. And if that market's alive and healthy, I think so is the stock market. But November is bearish for the S&P. From 1885 to the present, November in all months, 57.8% up. In years ending in 0, however, 34.6% up. In an election year, 60.6% up. In both the 0 and election years, it's 33.3%. So that's this approach worked in September, did not work in October. The primary reason why it's not working is that we see years ending in 0. I think we already had that crash earlier in the year, and that was the negative effect. And instead of the whole year being down, because there's so much money in the system, these corrections, as I've said many times, they get compressed into a very short time period. So let's look at the cycles in November. Okay, so I mentioned, I got ahead of myself. From October 30 to November 6th, that period has been up 69.2% of the time and has the highest expected return of any month. And there's a bullish bias into the election into November 3rd. And on top of that, I think we have a Federal Reserve meeting this week. And on top of that, October 27th is the average low in any year since 1885. So let's look at the monthly cycle. Now, the monthly cycle gave a sell signal, but it rallied up, but then came down hard. And that bottoms out at the end of this month. And that has been a highly reliable cycle. And I underestimated the weakness in the month of November. And so this week is taken care of. This week is up. But when we get to the 6th, I think this takes over. So that's the answer. It's a two two-part answer to the question. Up this week, it hits a high, and then this market, this cycle takes over. Let's take a look at the S&P, the formation. We can see a rally up to a new high, a drop in September, a rally. I thought it would go to a new high. It did not. It started to come down. So now you have the possibility of a C wave if it takes out that solid blue line. It's not going to do it this week. It's certainly not today. So let's go to the weekly cycle. The weekly cycle also points down. And you'll notice it. So November, it's a very high likelihood that this week will be up, that December will be up, and somewhere behind those two probabilities is a likelihood that the last 3 weeks of November will be down. Let's look at the 10-year cycle. And for those who are not familiar, the 1-year cycle in red is only the seasonal cycle of the year. It never changes. 4-year cycle is what they call the election year cycle, except it existed before we had the Federal Reserve and in countries where they have no elections at all. And then the 10-year cycle, which pulls the whole composite down, and here's the composite on the next page. And you see where we are in that little dip in November. So this also points down. So you got two longer-term cycles from different viewpoints pointing down. Now, bonds. Now, the last monthly buy signal failed, and a sell signal is pending for the last week of the month. In other words, bonds are on a buy now, but the buy signal is failing. So it's sort of like the guy is trying to swim in. We're going to throw him a cinder block. And the cycles have not worked well with bonds. And I think the reason this happens if you have very long-term cycles, like I always joke about the Pharaoh getting wiped out of all his wheat positions, 3,000 years ago. There are some cycles that are very, very long, and this date only begins in 1982 daily. So I think there may have been a shift in sentiment. The world is loaded up with debt, and many investors seem to think that this is where the next great crisis will be. In other words, there'll be defaults. And as one of my professors at NYU said, I am not only interested in the return on my money, I'm also interested in the return of my money. This may be the cause of the departure between prices and the cycles. So bonds, if the cycle's pointing up and bonds are going down, I have to be bearish. And then we go to gold seasonality, which your listeners may be familiar with now. You notice we're in the June through September is the most bullish part of the year. Then October, there's usually all that weakness occurs in the second half of the year. Those effects are now off. Gold is free to rally. October through February we're now in another bullish patch. So let's go down a little lower. Well, let's go sell something first.
Hey, there you go, buddy. You got it. We'll be right back with Bill Meridian Cycles Research, folks. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Bill Meridian, Cycles Research. Bill, we're on the weekly and monthly gold cycles. You want to continue, please?
We can continue now that all the bills are paid. Okay.
Good job.
Gold.
Good job.
We see monthly. Gold is up in November, not 59% of the time. You see the average return. December is 52, January 56, February 56. And you know, the guy who does the gold report, that advertisement was correct. The only solutions that seem to that the government seems to know, the central banks, is to inflate the currency a little bit or inflate it a lot. But they inflate it. And that's the driver behind gold, is huge increases in the money supply. So let's go down now and look at the weekly cycle on top, monthly cycle on the bottom. Well, they both point up. And November, December, seasonally strong. And there have been, by the way, on a short-term basis, a lot of gold highs in the month of December. We'll look at that next time I'm on. And however, I don't think you're going to see any serious high until January or February. So I think you're safe to hold gold. And let's see how overbought gold is. That's gold, 800 months. That goes back to 1966. And look at where I have Larry, do you remember January 1980? We thought gold was expensive then. Look at it now.
860, I remember, yeah.
Look at that. And then look at the high. That was 2011. And look where we are now. And again, this is inflation. I mean, somebody once said, this chap from Singapore, do you think this 90s market is what do you call it, a bubble? I said, what isn't a bubble? I said, the price of my clothes, my ring, your automobile. I mean, if it hadn't inflated the currency, the prices would be the same relative to each other, but on an absolute level, they'd be much lower. And so now here is on the next page, oil. Now, this is really the essence. These two slides I'm going to show you. This is the monthly cycle for oil. And you'll note it doesn't match exactly, but it's close enough. That initial dramatic decline. I mean, here's where Elliott wave comes in. If that initial decline was an A and then the subsequent move sideways was a B and we're starting a C, then it makes the timing much more precise. So it's turning down. Where's it turning down? September, October, November. Let's go to oil seasonality. Well, look at the weakest months. The oil usually tops in August and declines into November, but October, November are only up, I think, about 35-40% of the time, which means they're down 65% of the time, approximately. So if you've got the dynamic cycle pointing down on page 19 and the seasonal cycle pointing down on page 20, these are the types of setups that I look for. So I go through numerous markets trying to find with a dynamic cycle. I mean, if the daily, weekly, and the monthly cycle all pointed in one direction and that agreed with the seasonality, that would be the best possible combination. And we're looking at oil, the commodity. Let's look at move on one more slide. This is cumulative loss of value factor since the most recent peak, and this graph goes back to 1826. Value factor is derived from going long cheap stocks and short expensive ones. And so it's somewhat a measure of value stocks, and it's saying that value stocks are greatly underperforming. I mean, look, that goes back to 1826. I don't know how much further we can drive it back. But
Bill, someone's asked a question here. Which would you prefer, stocks or commodities over the next 5 years?
In the energy sector?
In any sector, just which would you prefer? If you had to be long something.
Boy, that's a hard question.
Well, that's the end. That's the answer. The answer is it's a hard question, and I agree with that.
No, wait a
5
minute.
years.
It's 2000. I think I'd rather be long stocks.
Okay.
Okay. Now let's look at this is the monthly cycle, but this is the energy sector, the XLE Energy Sector Select ETF. And look where we're at. This has been following that cycle fairly closely. And every time the fundamentals guys say the energy shares are cheap, they're at book value, we'll look at the cycle. That bottoms in late November, early December. And so I think, these corrections we've been having, and if money flows out of technology, as we know, is such a heavy influence on the indices that the indices could go down. Well, these stocks could make a tremendous rally. In other words, the money is just recycling a rolling correction from one sector to another. So I think this is the next great bull market, and I'm starting to filter through the stocks. And needless to say, you want to find, first of all, those that haven't gone bankrupt yet. You want those that are cash flow positive, that are very solid and very well financed. And I think that's the number one sector for next year. Now let's go down and look. And this, by the way, this page, this all comes from Jason Gopfert at sentimenttrader.com, which is an excellent service. Jason writes, stocks in the sector have fallen so much that they've become cheap. According to data compiled by Portfolio 123, out of 663 U.S. listed stocks in the energy sector, 470 of them have a share price under $5. Number two, companies are cutting employees and dividends. Active oil rigs collapsed faster than any other time in the last 30 years, and most of the share prices have dropped so much that they trade for book value, which in an inflationary period is amazing. Energy mergers accounted for about 1.3% of all M&A activity on average over the past 6 months. That's the lowest number in 20 years. So I've seen, you and I, Larry, have been around a while, and I've seen a lot of bear market lows. This is what they look like. They've got nobody's bullish. You got the cycle turning up, and look at these numbers. So lastly, we have the bonds. And, of course, the bonds have been misbehaving badly. And you see October, November are supposed to be up, but that looks like a fairly major peak, and it looks like we may finally have hit a period of rising interest rates. And the only other graphic I think I have here is this is the advanced decline line on a 10-day moving average of the highest grade bonds. Look at the series of lower highs. So that speaks louder than the cycle, because that's actual market data based upon the close yesterday. So the breadth in the bonds just hitting a new low. Now let's go to the bond weekly cycle, and you see there is, that's today, November 3rd, you see a red line. There's a sell signal. So it looks like from today, it looks like notes are a sell. So I would look at it this way. I think gold is a buy, bonds are a short, oil is a short, except it's already well into its corrective period. That correction may last until the end of this month in oil, the commodity. And but it would be very
okay.
But the energy and the stocks may bottom at the end of this month.
Bill, do you want to tell us
Yeah.
what you think about the election? What's your? Go ahead, my friend.
You know, I sent out a one-page sheet on it. I haven't done a tremendous amount of work on it, but to summarize, I'm just based on fundamentals alone. These Trump rallies, 25,000 people, nobody's showing up for Biden and Harris, and the Democrats have just run the worst possible campaign. If you want to be radical, you should at least conceal it. They're not even doing that. And I think Trump will win, but this eclipse coming up is opposite his sun, and I think he's in some degree of danger and going to have a very rough time. And he needs maximum security.
Okay. Wow. Thanks, buddy. Be safe, my friend. We love you. Talk to you later, buddy.
Love you too. Thank you, Larry.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I will be in the den tonight, probably right after the election results start to come in, and I'll probably be out most of the evening. I was 2016, so I don't think it'll be any different this year. I will be doing that. I posted a chart about the gold at 1907.50. That was a perfect Gartley at the 61% retracement. If you did that trade, you know, you're only risking $1.50. So if it makes a new high, you're wrong. Right now, it's trading at 1904, and I would watch it really closely in about 11 o'clock. Well, 11 o'clock in the morning here in New York. In about an hour, They should be making a pretty substantial bottom below 1900 in the gold if, in fact, I'm watching it the right way. Now, remember, these are only probabilities, folks. They're never certainties, but let's sort of keep that in mind as we're looking at it. The other thing that's happening right now is the notes are making new lows here, folks. As Bill said, they start to look nervous, and they do. I think where the big surprise will be in the market, if there is one, will be in the bonds and the notes, and that mainly because the Fed has been pumping, funny money into this thing for so long. Even since Helicopter Ben, that was, 12 years ago. You can see that that's something that is pretty crazy. So those are the things that I'm watching here tonight. So we want to thank Bill for being on. He was very concerned about his family. His wife and in-laws are over there in Vienna, but they are very, very safe. Everything's fine. They were never in any danger, which is good. And he's hoping to get back there, but the way they have the rules getting over there, it's impossible to fly to Austria anymore. So we'll be watching. As far as the virus is going on, folks, it's a disease. You got to keep moving on. It's not the end of the world. It's not the Spanish flu. It's not SARS. The death rate is rising a little bit, but, it's not the end of the world. If you stay safe, take care of old people, raise your hand, Larry, you'll have a better chance of getting through this. But we will get through it. Things are going to be better down the road. And no matter who gets elected, we're going to be okay. I hope we can all be friends when it's all over. Whatever you're red or blue, you've got to be there to see the sky in the morning. May God bless. See you on the flip side tomorrow with Alan Quartermain. Don't miss the show.